All right, welcome everyone. Welcome to the Trade Findings and Adjustments for Thursday, the 16th of April. If you live out here in the Salt Lake City, Provo, Ogden, Utah area, it's 7:40 while I'm sitting by my computer. My desk started moving. And at that point, we heard the girls scream. They went through their first earthquake about 3 days ago. Excuse me, 3 weeks ago. And needless to say, it was not bad at all. It was a slow roller, but the comment that my littlest one made was I didn't like how the ground was moving underneath me, and I didn't know how I was going to survive. Oh gosh. It wasn't bad. It wasn't even bad. But to her, it was life-threatening. That made me think of the market. So I'm going to go through this today. And I'm also going to go through this on Monday. So all I'm going to say is I'm going to go through a couple different things, and you guys are going to get it a couple days in a row. We'll get it in the trade findings and adjustments today. We're going to get it in the Monday commentary as well. So someone tell me, what were we waiting for this week? There's something we were sitting on and waiting for, something we wanted to see. What were we waiting for this week that we were going to want to see? Because that will determine how we're going to trade moving forward. So go ahead and type in, what were we waiting to see? What were we, and no, it's not if Kevin has the coronavirus, right? What are we waiting to see and what are we looking for? There we go. 4 answers came in really quickly. Bill, testing that 2010 range, you're near that. Lance, looking for a triple bottom. We have Mary that says a W pattern. And why the W pattern? What is it about that W pattern? Was asked to me the other day. It's the percentage of things moving higher, right? Not things, that doesn't make sense. It's the percentage or the probability of having our markets move higher. If we're in a W-shaped form, it actually is, again, high 40%. It's almost a 50-50 crapshoot, right? When it's a double bottom, it moves up to 80. And if it's a triple, and again, it's like 83 or 84. I don't have the exact numbers. And again, if it's a W or a triple bottom, then we're looking at like a 90%, 92% run up from there. So the percentages of getting a rebound are bigger. Kramer pointed out a week ago, hey, since we've made a 50% retracement, we're in the clear. 9 or 19 of the last 9 or 19 of the last bear markets, I don't remember how many he was going back to, but 100% of the time, if we made a 50% retracement from the highs, we plain and simple had 100% of the time we bounce higher. We do not go back to test those lows, which is an amazing probability because that's going against my thought process of seeing that bounce back. I was using the example on Monday of Eli Lilly. And Eli Lilly is a great one to use because it actually is doing what we want the stock market to do. When you have that W, that wedge pattern, right? The triple bottom, down, up, didn't quite come all the way down, but close, up, and then we had the 2-day washout, right? It also coincided with the 200-day simple moving average. Not only did we get back up to that 145, 147, we're now up to 153. That is the wedge pattern. That is the triple bottom. That is the 92% of the time or 94% of the time, I don't know exactly, that from this chart pattern, it goes higher. So we're looking for this washout that's going to be quick and violent to the downside. Hey, all the retail guys throw up their hands. They freak out. They're out of here. The hell with it. They're gone. And the stock market heads up higher. So that's what we're looking for. What we're getting is a little bit different. On the SPX, we're like, no big washouts. In fact, if anything, Kramer's, hey, we hold on, seems to be in play, right? We've got a down day. We've got a couple uncertain days. It's like a double doji where people are like, I don't know, we're going to go back up, we're going to go down. We don't know. We're in flux. You could say, but Kevin, we are building a base, which we could be. But I'd feel more comfortable building a base above the 50 or the 200. And someone tell me really quickly, what do we get when the 50-day simple moving average drops below the 200? What is it called when that 50-day drops below the 200? A whole bunch came in, a death X, a death cross, a death cross, a death cross. Correct. It's the ugly death cross, which typically means that if you get a death cross, it's like 8 to 18% to the downside in the next 6 months. And that 8 to 18% to the downside almost coincides perfectly with the pivot point when it crossed maybe a little bit above it, but it's that 2637 range. The right there where if we went 8% down, let's see, 2637 times 0.08, we'd lose 210, which would put us down to that 24-25 range, pretty close to that low. If we went the full 18%, right, 2637 times 0.18, we'd lose 474, which would put us right down at that 220, which would be our triple bottom. So here we are. Here we are looking at this and making those decisions based on probabilities and past history. A comment was just made, just so you understand, pivot points. Your pivot point is the center one. You then have resistance level 1, resistance level 2, which are the two that are higher. And then you have S1 and S2, which are support levels. Now, all pivot points really are to the upside. They're like a 30, 60, 90-day average of the resistance levels. But to the downside, they're 1 standard deviation and 2 standard deviations. So plain and simple, all I'm trying to get behind you is the math and the probabilities for what we're looking for. At no time does it tell you that we're going to do it. It's just not there. We don't have a, hey, the all clear is here, the all clear is that, there. all it gives you is a general idea of where we could move to if we go up, where we could move if we go down. If we go down, it's about 2,200. We have a death cross. We have our triple bottom that we're looking for. We really need a couple wipeout days to get there. We very easily could get there in 2 days. And as we were looking for the forgiveness, right? What kind of forgiveness are we going to get? How are they going to look at earnings? Well, I'm going to tell you as of right now, especially for the financials, there is no forgiveness for missing. JP Morgan's down from 104 down to 88. No forgiveness on the financials. We're down, what, 16, 15, some odd percent here. JP Morgan mixed earnings and they missed. I guess it wasn't a mixed earnings. They missed top and bottom. It was Bank of America that gave the mixed earnings. And 25 down to 21. Geez, there's their 20% drop. Key Corp, they were the mixed ones, excuse me. 12 down to 967. Morgan Stanley, 41 down to 38. Citigroup, 49 down to 40. I mean, we're hitting 20% drops all the way across the board. If I looked at some of the other banks that reported, Goldman Sachs, 187 down to 174. They are not as bad, but they have a pivot point there. U.S. Bank Corp, one of the biggest small business lenders, 38 down to 32. Wells Fargo, I really don't like them. They just suck. 33, 34 almost down to 26. They're at a 25% drop. First Horizon National, 9 down to 723. Unbelievable to see First Horizon National so low. They are huge. With that said, United Airlines, 32 down to 28. Not too bad. American Airlines has not had their earnings yet, I don't think, but pretty similar. Not too bad. Bed Bath & Beyond reported yesterday. They don't look very good either. United Healthcare, boy, they were skyrocketing. $11 yesterday, another $10 today. Healthcare might be the way out. Las Vegas Sands reported yesterday, 49 down to 45. They don't look particularly good. Today was Key Corp, but we've got Abbott Labs, BlackRock, Honeywell, SRG, Sky Networks. We got a bunch coming up here after the close. So there appears to be no forgiveness on missing earnings. And just like in Utah, when the market goes through an earthquake, you have some choices to make. So I want to talk about survival today and in today's market, right? I'm going to also relate that to survival in life. And I think there's some people that deal with stress better than others. There are some of us who, for lack of a better term, the way I wrote this, that are probably more experienced at making life or death decisions than others. And maybe just because I've been able to look at death a half a dozen times, it's maybe taught me to understand that, you know what? The market is never a life or death situation. It may feel that way. In your portfolio, it might look that way for a period of time. And in all honesty, there's some of you that probably did get wiped out in 2008. And that happens when you have a typical broker just put you in a fund, put you in a group of stocks. Their job was done gathering your money. At Hurley Investments, our job starts once we have your money. In fact, we probably put 10 times the effort once we have your money into being in contact with you, communicating with you, helping you to understand what's going on, what we're doing, and why. Doesn't mean that we're always correct, but our job starts when your money hits your account. Whereas on all the big brokers and all the big guys, their job ends when your money hits the account. From that point, you know, it's just, hey, what happens is happens. It's the market's fault. Stay in it. It always comes back. When some things don't, it's a pisser. It's really ridiculous, to be honest with you. So I want you to understand that Jeffrey T. Smith, and I understand where you're coming from, and we're trying to help you put this into a perspective. There's some of us that are more adept to having and making life or death decisions. And the key, this is the one I was hoping would come up, the key is to remember the only easy day was yesterday. In fact, a lot of the time, you know, you've heard that before. This is a military cliche, right? The only easy day was yesterday, so relax a bit. You'll hear the mantra through, I'm pretty sure it's I think that was the Navy SEALs. I don't remember what branch of the military is, but embrace the suck is one of my family's little cliches that we use all the time. Embrace the suck. You're still alive. Your account's still alive. You still have you still have an opportunity to fight another day, right? That's what we're looking for. We still have the opportunity to fight another day. Embrace the suck. It's kind of funny because Bill Brander actually just typed in, I spent yesterday at the shooting range about 4 to 5 hours. Nice day. Keeve, unbelievable. Keeve understands guns, ammunition. He is, in my opinion, a pseudo gun expert. That's his release too. I'm sure Keeve was probably at the range shooting things up. I go out to the desert because I want things to blow up. Little tenderine and watch it explode is a good day for me. But the only easy day was yesterday because it's over. Today is a new day, and you've got to regather your information. You got to relook at everything. Man, yesterday, Keeve and Jeffrey T. Smith and I, hour and 45 minutes going over everything. Hour and 45 minutes talking about what about this, what about that, how about this, how about that, what are we seeing here, do we see this here? We really went through a lot. Keith and I were on the phone, I mean, hour and 45 minutes easy, going through positions, what we're looking at, planning our next steps. But you can only do that by embracing the suck and not rolling over and dying. quitting is not an option, right? I think the other one, what is it? Losing's not an option. Well, you're not going to lose. But if you truly are going to be an investor, right? Quitting, can't spell, isn't an option. Well, of course it is. I can pull my money out. I can let it sit, and I'm going to tell you, historically, when you quit, you miss the days back up. That herd mentality, that, oh my God, it's too hard, I'm not going to make it, I can't do this anymore. When that happens is when big money moves back in. So you take all the pain on the way down. You don't embrace the suck, right? You don't realize the only day was yesterday. You don't live by your mantra, quitting isn't an option. For the military, it's losing's not an option, because you lose, you die, right? You're not going to die in the stock market. But you get out at the bottom, you've taken all the pain, you don't reap any of the reward on the way back up. That's why we collar trade. We collar trade, we protective put. Anything we make up to the downside is profit as things come back up. There are some of us in this industry that have confronted death numerous times, and I put in there that we kicked its ass. If you talk to the military, Ida, I'm going to apologize. Mary, I'm going to apologize. In the military, they confront death. They have that Bravo Cavalier attitude. I'm all this, I'm all this. They don't ever say they kicked its ass. What they say is they kicked it in the balls. It's that mentality that sometimes borders on arrogance. It sometimes borders on stupidity. But it's that mentality that I think, because I've been able to go through a 2000, I've been able to go through an 87. The biggest one was the 2008 for me. When you confront, call it death. When you confront, call it the drops, the bear markets. When you confront these type of market conditions, the experience you have gives you the ability to kick its butt, to kick it in the balls, as the military would tell you. Now, the thing that most people forget is it's a process. And during that process, it's a process bottoming, right? The market is full of cycles. And those cycles are not predictable to the day. They're predictable for a year, right? They're predictable. No one ever asks you, so how much did you make yesterday? How much do you make each week? How much do you make each month, each quarter? That's retarded. That's just stupid. That's stupid talk. What were your gains for the year? And the funny thing is, most people talk about averages. I'm going to go through that in a second here too. But averages aren't your friends. The correct question is, how much has your portfolio grown? And what process did you use to get there? Sometimes when it comes to death, you are so beaten down that you have two choices left. You either choose to survive and live, you either choose to quit and die. And that's it. Are you going to survive and live? Or are you going to quit and die? And the options are those two. For some people in the stock market, they look at it at exactly the same way. And it never is that drastic. It's not. When I hear about some of the people that jumped out of buildings back in the day, nowadays when I hear about people that commit suicide, that commit fraud, and that choose to take their own life, it's I gotta be honest with you, it's a bit scary. It shocks me. I don't understand how some people consider it a life or death situation. The reason why is they've never been in a life or death situation. They've never heard a bullet zing by their head. They've never had the pleasure of hiding behind a plastic trash can with your brother between two gangs shooting at each other. They lack the experience, and so they overreact. When you overreact in the stock market, you usually sell everything off. You take a huge loss, you miss the upside on the way back up. Those are the probabilities. Where is your head at? And why do some people in the stock market limit themselves to those two choices? Survive and live, quit and die. Survive and you live, you quit and you die. The market isn't set up that way. The market is set up to endure to the end, to endure or embrace the suck on the way down so that you can reap the rewards on the way back up. It's never a life or death situation. It's never too hard. Some people might feel like it's too hard. And so it comes down to what you choose to do. In Hurley Investments, we're going to tell you, we choose to live. We collar trade. So at Hurley Investments, we choose to live by collar trading. It's our goal to make up something to the downside. It's kind of weird at this point in time. We're looking to cliches to help people succeed. We're looking at some of these military cliches to help people not quit. But Kevin, the market's so hard. Cry me a freaking river. This isn't hard. It's just down. Oh, Kevin, you're not beating the market today. Boo-hoo. Embrace the suck. At one point in time, did I ever suggest I would beat the market every single day? I'm looking at this for a year. And not only that, sometimes, especially when you're collar trading, the first year is your worst. And then it gets better from there on out. Sometimes it's a 2-year process. Sometimes the market makes it a 3-year process. For Ford right now, we're on a 4-year process. For NVIDIA, it was a 3.5-year process, and the thing took off. For Apple, it's been a 5-year process. For Visa, Disney's been at least a 2-year process. Visa's been a year. Baidu was like 3 months, and we killed it. But find what you need to find success. Find what you need to get you through the hard times. And to put this into a perspective for you, the market truly has not been hard yet. It's been down a little bit. Oh, Kevin, my portfolio's down 12%. From the highs, we're down, 13%. Yeah, but from where your portfolio started, you might only be down 5%. I tell you, you focus on the negative, you're going to get your ass kicked. If you focus on the positive, you'll probably kick the market's ass. There's a difference there. I'd much rather be kicking someone's butt than having my butt kicked. Losing is not an option. You'll hear that in the military, right? Losing is not an option. For them, if they lose, guess what? It's life or death. If I can go ahead and reiterate this or say a little bit different, losing is an option for a period of time in the stock market. Can I introduce you to the first red flag? When you talk to someone that's like, oh, I'm killing in the market, I'm doing this, I'm doing that, that's when you call BS. Oh, I haven't lost a penny because I'm collar trading. That's when you say, pull up your account, prove it. Put your money where your mouth is. Talk is cheap. Proof is extremely hard. And right now, it was yesterday, pretty neat on some of my bigger accounts. In fact, on all my bigger accounts, except for 2 people that are in Boeing, I've got accounts that are in that $800,000 to $1.3 million range to $760,000 that are profitable. And it's not yesterday, the day before, on Tuesday, I had some of my big guys that were profitable. I did have the question, well, why didn't you put them in Boeing? Well, I got a doctor that says if I put him in any airline stock, he'll fly a plane into my house. He hates planes. He hates the airlines. He'd never go into them. I've got another one that, as I talked about going into Boeing with him, he said, you know what? It's probably a good trade. I just don't like it. Pretty neat when you can see 3 of your big guys profitable. Well, Kevin, how'd they do it? Well, they own a lot of Apple. They own a lot of Baidu. They do own some Disney. They do own some Visa. Haven't done as good as those yet. Those ones haven't really come back. Big run in Apple. Well, Kevin, God, you didn't have protection on from 240 up to 283. There were no long, but you had no your protection was way down at 240. Yeah. Level 1, we were taught technical analysis. You show me someone that's rolling their protection up every $5, every $10, they can't make money. They also don't understand technical analysis. With all due respect, if you're rolling your protection every single time your stock goes up 1 or 2 strike prices, if you're not following the short-term trends and letting some things run, you will never make money in the stock market. This is a level 1 concept. This is taught the first level of every single education. You were taught every single time, hey, if it's bullish, if you have your crossovers, if you're moving upward, why in the hell would you put a bearish position on and roll and give away your profits on the way up? We let Apple run from 235 to 283 basically, and then rolled some protection up to 270. We didn't protect at the money. We're trying to make money here. It was a hell of a run on Apple. Under Armour, $7.50 up to $10. Ah, you didn't protect at $10. You protected at $9.50. We just had like a 33% run. You're an idiot if you think you're going to hit the highs of the highs and the lows of the lows. We made up a portion of the wave up. We protected $2, 20% of the value of the stock at a higher price. Did we get 25? No. But we got a good chunk. How am I going to finish this off today, right? Little successes will add up to a big win when it's all said and done. But it's a process again, and that process takes some time. We don't have a timetable. You can't predict the future. Anything that's made up on the way down is profit as things come back up. It's that simple. The timetable, it's over time. What you need to succeed is what you do during the process of a bottoming. You can sit and take all the pain. You can wait for it to come back. By the way, mathematically, that hasn't worked since we picked up the reserve currency status, mid-70s. Go to YouTube and the Hurley Investments YouTube, the short video on real rates of return for the S&P 500. Maybe I'll stick that link in here for you guys to watch that. But what you need to succeed, 100% depends on what you do during the process of bottoming in bear markets, and it relates to life. I'm going to say this politely. If you want to be a shit, bitch and moan and complain about it your whole life. Make it someone else's fault. Be an a-hole. There's plenty of them out there. Or be proactive. Find something, anything to do to be proactive. Right now, my kids had what we call Trek. It's what is it? It's like a 38-mile hike. They pull hand carts like the old pioneers. It's a 5-day trip. It's pretty brutal. Part of it's out in the desert, and my oldest is just like, Dad, we're gonna miss Trek. We're not going to get this opportunity to go suffer for 5 days out in the desert pulling a hand cart. They give them just some bread and some hardtack to eat one of the days. They go through what the pioneers did, what the explorers did for the United States. They give them that kind of life. For a week, my boys were scheduled to go on this trek, 38.5 miles, pulling hand carts. sleeping in the dirt. And to the credit of my boys, they're bummed. The coronavirus has ruined Trek this year for this church youth group. My boys were excited for that challenge. Now, there are some groups, some youth in the neighborhood I live in my church group, that are like, it's canceled. Thank goodness we don't get to go through it. They are so excited to not be challenged in life. And I look at my boys and they're bummed. They're already starting to prepare. They're sharpening knives. They're trying to see how they can put a little extra twine in their backpacks. They're thinking about how they can set snares and traps to catch extra food so they're not stuck with a piece of hardtack and a small baggie of bread they can make into dough, right? I'm proud of my boys, seeing them take on this challenge and prepare now for what was going to be a butt kicker down the road. And that same challenge is presented to us in many different ways in life. How are you going to take the challenge of the stock market? How are you going to react to it? I'm coming up with one last thing. Abraham gave this to me. No one knows. These are just models. This one happens to be in Portuguese, right? The alimentação is the short answer. It's your salary. And salaries for some people are going to be going down. They're going to be fired out of the workforce. We're going to go through a struggle. We're going to come back up. Companies will start to rehire. Salaries might not recover for at least a year, if not more. Trips, spending money, airlines. Well, they tanked like no tomorrow. That's not the airlines. That's just driving or vacations. The airlines is the light blue one that, again, won't come back to any break even under this model until April of next year at the least. People going to restaurants. Orange line. Apparently that's shot for the year. Hotels, people traveling, spending in hotels. Not going to make it back for a year. Really, we're going to have a wave of defaults on mortgages. All the people that were buying properties, the ones that were telling me, hey, I make $2,200 because I put it on BRBO. I'm out there renting out my place at some pretty good prices for weekends. Man, those people are going to get crushed. You might see the BRBOs, you know, they just might, plain and simple. It wouldn't surprise me to see that industry evaporate by half. All I'm trying to say today is you have a choice. You have a choice on how you react. You have a choice on what you do to prevent your pain. The only easy day was yesterday. We're in the process of maybe having a W return. We're in the process of maybe having a V-shaped. We might have already had our double bottom. We don't know. The funny thing about charting is there are no guarantees. But what we do know, there hasn't been forgiveness on missing earnings right now. There's no forgiveness. Companies are getting whacked 20, 25%. So you plan accordingly. Some of those have short calls on them. The JP Morgans, Bank of America, we're probably going to get some more short calls in place. Key Corp really doesn't have a good credit for a short call, but you react. We prevented the big losses by having bear puts, long puts in place. We'll add some short calls after earnings when we get the direction, and we'll protect accordingly. Guys, I'm going to finish off with this today. Bottoming is a process without a timeline. Quitting isn't an option for the military, but you guys can quit anytime you want to. It comes down to the choices that you make. Do you choose to sit and suffer? Keep your money in an everyday broker and, just watch it disappear by 20, 35%, hoping it comes back? Or are you going to proactively manage your money, or have someone proactively manage your money that will make something on the way down so that it's a profit when it comes back up? The choice is yours. Are you going to kick its butt, or are you going to get your butt kicked? Guys, I'm going to go through this on Monday when we have a bigger crowd. This is my test. My test on what I wanted to go through. This will most likely be Monday's commentary as well. I suggest for some of you that are here today, if you haven't already made your decision, make your decision. Make your decision on what you want to do in the stock market, because that travels over to life. Quitting is an option. It's not the best option, but it's also not life and death in the stock market. My suggestion, live. Choose to live. Choose to do something to work your way through the down times so you can enjoy the up times even more. That's life, right? Life hands you lemons, you can make lemonade, or you can suck on a sour lemon. The choice is yours. I appreciate you guys being with us today. Have a great day. It's interesting when you look at your little daughters and how freaked out they were. And you say, hey, gals, girls, you have the choice to freak out and worry, or do something and get yourself to a doorway. Get yourself under a desk, under a table. Give yourself the best opportunity to be protected and to make it through it. One of my daughters, yeah, Dad, I'm going to work on that. The other one hasn't made up her mind yet. It's only an earthquake. It's only a bear market. Could it get a lot worse and go into a recession, a Great Depression? Possibly. But not today. We're not there yet. Doesn't do any good to worry about that today, but it doesn't mean you can't prep yourself and prepare yourself for if that happens. Guys, have a good day. I'm off my soapbox. I appreciate your time today. I hope this is helpful. I hope this helps you get a mindset in regards to how to attack the stock market and how to live life. I appreciate your time. I'll see you on Monday if you can make it. Monday evening, I'm going to go through this one more time, probably a little bit different, but the same thoughts are going to be there. And my hope is that I can help you guys find a way to survive the stock market, that I can help you guys be proactive in finding ways to succeed in life. Have a good evening. Actually, have a good day. Have a great weekend, and I'll see you next week. Goodbye, everyone.